China has just pulled the financial rug from under the United States, triggering what analysts are already calling a $1 trillion zero-cents exodus. For decades, American banks dominated global finance, serving as the nerve center of investment, trade, and economic power. But now, that empire is beginning to crack. In a stunning turn, Beijing is slamming the brakes on U.S. access to its financial markets, rejecting key Wall Street firms, accelerating de-dollarization, and redirecting capital flows toward BRICS allies. The message is clear. China no longer needs Wall Street. And the consequences? They could reshape global finance for decades to come. This isn't just a policy shift. It's a declaration of financial independence. For over a century, Wall Street has been the undisputed king of global finance. From New York's towering skyscrapers to hedge funds in the Hamptons, American financial institutions dictated where the world's money flowed. If a country needed investment, it went to Wall Street. If a corporation wanted global capital, it listed in New York. And if a government wanted to store wealth, it bought U.S. Treasuries. This system turned America into a financial superpower and allowed it to project influence far beyond its borders. China, for years, played along. It opened select markets, allowed U.S. banks to operate in Shanghai, and became the largest foreign holder of American debt. Wall Street, in return, poured billions into China, fueling everything from tech startups to state-backed infrastructure. But behind the scenes, Beijing was watching and learning. Every financial crisis, every sanction, every interest rate hike served as a reminder that too much dependence on the U.S. was a strategic vulnerability. The 2008 financial collapse, followed by the weaponization of the dollar during sanctions on Iran and Russia, solidified one truth for China: control over money is control over destiny. So, over the past decade, China quietly began building an alternative system, one not controlled by Washington, not cleared through New York, and not subject to U.S. political pressure. The digital yuan was launched. Cross-border payment systems like C-pipes emerged. Trade agreements increasingly used local currencies. And most critically, China began dumping U.S. assets. Slowly, silently, and deliberately. Now, in 2025, that quiet resistance has become an open rupture. Beijing is done playing second fiddle. The old system, dominated by the dollar and Wall Street, is being rejected in favor of a new financial order. And the West is only just beginning to realize what that means. The moment the world feared, and Washington dismissed, has arrived. In a bold and highly coordinated move, China's central government issued sweeping restrictions on U.S. financial institutions, effectively freezing major Wall Street firms out of its domestic markets. J.P. Morgan, Goldman Sachs, Morgan Stanley, all blocked from new underwriting deals, equity listings, and direct portfolio expansions inside China. At the same time, Beijing instructed its sovereign wealth funds and state banks to drastically reduce exposure to U.S. assets, particularly Treasury bonds and tech-heavy equities. Overnight, billions in American investments began disappearing from China's financial ecosystem. What was once a quiet exit became a full-scale retreat. But the blow didn't stop there. Chinese regulators suspended cooperation with U.S. credit agencies, delisted several American consulting firms, and announced tighter restrictions on capital inflows and outflows involving U.S. partners. In short, the financial decoupling that analysts once saw as theoretical is now official policy. Even more telling was Beijing's announcement to accelerate currency swap agreements with BRICS nations, allowing trade settlements to bypass the U.S. dollar entirely. Major deals between China, Brazil, and Russia are now being finalized in local currencies, not greenbacks. This was not a spontaneous decision. It was a chess move, planned over years and executed with precision. Chinese state media framed it as an act of sovereignty, a necessary measure to protect the nation from external manipulation. Western analysts called it economic warfare. Wall Street, caught off guard, is scrambling. Billions in Chinese exposure is now at risk. Stock prices of major U.S. financial firms have plunged. And yet, this may only be the beginning. The tools that made America financially untouchable are now being turned against it. China has drawn a red line and crossed it. The financial shockwaves were immediate and brutal. Within hours of China's announcement, U.S. markets tumbled. Wall Street's biggest banks saw billions wiped from their valuations. Goldman Sachs fell 7%. J.P. Morgan dropped 6%. And Morgan Stanley slid nearly 9% in a single trading day. The Dow and Nasdaq opened in the red, signaling widespread investor panic. More than just stocks were hit. Bond yields spiked as fears of large-scale Chinese selling of U.S. Treasuries gripped markets. With China holding over $800 billion, 0 cents, in American debt, even a partial offload could wreak havoc on interest rates, mortgage costs, and federal borrowing. At the same time, currency markets reacted violently. The dollar weakened against a basket of emerging market currencies, especially the yuan, ruble, and real, signaling a possible realignment in global capital flows. Meanwhile, corporate America is on edge. Dozens of S&P 500 companies with deep China exposure, Apple, Tesla, BlackRock, are now reassessing risk, redirecting capital, and scrambling to understand what comes next. This isn't just a diplomatic spat. This is a full-blown financial rupture, and the damage is spreading faster than Washington can contain. China has weaponized finance. And Wall Street never saw the knife coming. To understand China's motives, you have to look beyond Wall Street and into Beijing's long game. This isn't just retaliation, it's strategy. For years, China has watched the U.S. weaponize its financial systems, cutting off rivals from SWIFT, freezing foreign reserves, and using sanctions as economic warfare. To Beijing, this was a warning. Never let your enemy control your wallet. So China began building a parallel world. The digital yuan was developed to bypass U.S.-controlled payment networks. The CIPS system emerged as an alternative to SWIFT. New trading blocs like BRICS, SCO, and RCEP began settling deals in local currencies. And Chinese state media pushed a clear narrative. Financial sovereignty is national security. Now, with the U.S. escalating trade wars, expanding tech bans, and squeezing allies to isolate Beijing, China is striking back, financially. Decoupling from Wall Street is both a shield and a sword, protecting China from external shocks while accelerating the creation of a new, dollar-free financial order. It's not just about rejecting the West, it's about leading the East. And in Beijing's view, every move away from the dollar is a step toward global leadership. What's unfolding isn't just a rift between two economies. It's a reordering of global finance. For decades, the U.S. dollar was the backbone of international trade, investment, and reserves. But now, that dominance is under attack. By cutting off Wall Street, China isn't just reshaping its own future. It's giving emerging economies a blueprint to follow. Nations long dependent on U.S. capital are watching closely. If China can survive and thrive without Wall Street, others may follow. The shift toward a multipolar financial world has begun, where regional currencies replace the dollar, and local alliances matter more than Western approval. The implications are enormous. U.S. influence over global markets may shrink, sanctions could lose power, and American companies could lose privileged access to growth economies. This isn't just a financial story, it's a geopolitical turning point. And the West is slowly realizing it may not be in control anymore. A new chapter in global finance is unfolding, and there's no going back. Wall Street's era of unchecked dominance is fading, replaced by a rising order led by China and its allies. The question now isn't whether the system will change, but how fast. Will more countries abandon the dollar? Will other nations follow China's lead and reject U.S. control? Or will Washington fight back with even harsher economic measures? One thing is certain, the world is watching. And as $1 trillion, 0 cents begins to move, the balance of power may never look the same again.